Hello and welcome again to Currency Articles, another tutorial video. You are with Trend Boy Analysis, Currency Articles video on Trend Boy Analysis. There's three of us actually. There's the chartologist and the fundamentalist. But I'll be looking at charts today, and today we want to discuss support and resistance levels. So, using theoretically speaking, how support and resistance levels work, using an example or an analogy, for example, is you have a tennis ball, you have a floor, and you have a ceiling. So what happens with this tennis ball is you throw it to the floor, it finds support at the ground. It hits the ground, it reaches the ceiling, it hits the ceiling, it reaches the ground again. So just like that, it keeps going up, down, and that's basically how support and resistance works. So that was the analogy. We are now going to look at this practically. Um, Assuming this is our tennis ball right here, it is being thrown. When it hits that level, in this case the floor, it reaches the ceiling again. When it reaches the ceiling, it goes back to the floor and back to the ceiling. So we want to know about support and resistance levels and how they actually work in forex trading. So this is actually market price data, how the market sentiment feels at certain levels, whether people look to buy or sell a certain asset. So we are looking at the US dollar versus the Swiss franc today. So we've spotted a support level and a resistance level with the dollar Swiss. So we're going to find these support and resistance levels. First of all, to find a support or resistance level, you have to connect tops for a resistance level. So basically what you find here is that traders find this area here. Every time price reaches this area, as you can see, people start selling. So we're going to use a horizontal line here so that you see exactly where I'm aiming this. There you have it. You have 0.979. Every time price reaches 0.979, in other words, $1 is equal to 0.979 Swiss franc, sellers start selling and dominating the market again. Now this is our resistance level. Basically, they start selling every time it reaches there. And we also have our support level where traders look to buy. So there we have it. At 0.952, traders look to buy the pair. In other words, they buy the dollar versus the Swiss. And every time the dollar reaches 0.979, traders look to sell. And it basically, as we've explained with trend lines, if you looked at our video for trend lines, it's a bit of a ping pong game here, with buyers and sellers, buyers and sellers. And in forex trading, the beauty of it is that history repeats itself. So in other words, you could sell this here and start buying. You buy here, you sell there, you buy there. Of course, you have to be careful not to just start buying or selling the moment you either spot a resistance level. The smartest thing for any trader to do is to wait to see whether that support or resistance level will hold. And if it breaks, in other words, in this case, it did not break. As you can see, that created a very weak candlestick right there. In other words, the sellers only tested the resistance and it bounced all the way back up. So this could have been caused by news, the economics that come into play. If you're looking at this sell-off right here, it was a very bearish sell-off right here, a very bearish bloodbath took place. So those are fundamentals. So discrediting fundamentals in our tutorial video and looking strictly at support and resistance levels using technical analysis, we can see whether we should buy or sell. So finding, first of all, a support or resistance level requires multiple time frame analysis. For example, looking at the 8-hour chart, you probably don't find it's the same data, of course, but different time frames. Therefore, you have to find them. You have to look at different charts. For example, here I can spot a downtrend and I can spot an uptrend. So you have to find these levels. That's why when technical analysis, you're always advised to get a bird's eye view. Step back from the market, see exactly what's happening. So the problem with support and resistance levels is this: they are not indicators. And another problem is traders have to place them themselves. In other words, you do not click. There's no button or indicator for support or resistance. Okay, we'll look at the Fibonacci retracement later, but for now, manually finding support and resistance levels requires a trader to find that support or resistance level themselves. And that is where it could get tricky, because you could think you have a support or resistance level and you actually don't. Some traders are not looking at those levels. So that's where your Fibonacci retracement comes into place. We'll be discussing that in our next video. We hope you enjoyed this one for now, and hopefully you get to employ these strategies. This is not trading advice. We hope you get to buy and sell and make us a lot of money, a lot of profit. And thanks for watching. To book a free trading lesson, please click on the link below. To learn more from us and find more trading strategies, please visit us on currency-articles.com. Thank you.